Cipher mining. Okay, so we'll throw this moving average on. Let's see. So price actually is bullish. I mean, big push up here. It's pulled back, held above this moving average, and is now looking like it's pulling up again. So, but it is at an area of resistance. So let's just see. We'll break this down on all the time frames and see if we can maybe figure out a trade setup. I'm just curious. First thing I'm going to look at here. It's not the best look. Even if we look at basically this entire segment here, pull this from here. Oh yeah, that's perfect. So price pulled right down to the 618 and has been bought up since, and 618 has held it just perfect. So right here is what we're looking at. So you got this moving average and you have the 618, which is the most common retracement level. So I mean, this is textbook. I would look to keep buying this. So, and what's nice here is looking at this on this daily chart here, you can see prices come into this liquidity zone, previously sold off. Big bull momentum coming into it, has sold off on Friday. You can see we got a bearish engulfing candle, but all that means is that it's most likely going to happen, and price did gap a little bit here, but I'd be looking for just a bit of a pullback, and then probably it might get held at this 38.2 level because the trend is pretty strong, but I do prefer the 50% to 618 level. So I'd be looking for price to come down a little bit further, probably Monday, Tuesday. It's Sunday right now, so market's closed, but Monday, Tuesday, look for price to keep coming down a little bit, especially because we did get that bearish engulfing candle. So let price come down to this area here and then get bought up. Right at the 50% 618 level, and then I would target even higher. I think this trend is really strong. I think what happened here was, I think all this was just a healthy pullback, and then the buyers came back in here, and you can see it even gapped. So I do think it's going to head higher. So let's figure out our ranges, and then maybe we can find a trade setup. So I mean, this week, well, this previous week, you can see super bullish. So that's also a good indication that next week or this upcoming week will be bullish as well. Price did move $1.08 last week, which is quite a bit. It usually moves about 62 cents on average. So a lot more volume coming into the market for this stock. So, which also tells me that it's probably wants to go higher. So as far as ranges, I mean, you kind of just have to I mean, we might be able to shoot for $1 again, but I mean, the average range is about 62 cents, 60 to 70 cents. So, looking at this kind of setup here, what we could kind of shoot for next week. I mean, we could be pretty ambitious, and because this previous week that just closed it over $1, we could shoot for $1 again. I do think there is more volume in the market, so I don't think the averages are that that fair to go off of. There's an area of liquidity right here, so I mean, that would be kind of more fair to target. I think if we look on the weekly time frame, yeah, so this area is a little bit higher than this area. So I'm just trying to think. I mean, we could even target even a little bit higher. Somewhere right here, there's a liquidity pocket. So, maybe the bottom of this zone, maybe $1.05. I do think it's reasonable. I think it is above average, but I mean, this week that just closed at $1.08. We do see, you look at this weekly candle, there's a ton of momentum here. So you look at the monthly that's closing, that's a healthy candle. It's engulfing. So I do think this is strong, so I would be willing to target this zone up here, especially, I mean, if things get a little wonky, once price comes back down here, gets bought up, if it hits this area again right here and it's a little iffy and we get like another bearish engulfing candle in this zone, then I mean, you just close your position because clearly it doesn't want to break this area yet. But if it blows right through this zone, which I think it very well could, then it's probably going to this one. There's the momentum in there, so I think it could push right up to this area. Maybe this area right here. I think like what's probably going to give us issues if we throw on a fib here. This 618 level, I mean, that's perfect. That is most likely. So even if we're wrong, let's just pretend we're wrong, playing devil's advocate here, and let's say this is bearish and it's going to continue downwards. It's pulling back, in order to, maybe it's only pulling back in order to go down lower. Right, let's say we're entirely wrong. It's still most likely going to pull up to this 618 level. So kind of, even if we're wrong, we're right. It's kind of how I look at it. So it's kind of how I base a lot of my trades, and it works out pretty well. So, you know, we're going to anticipate price coming back up to this area. So we'll delete this for now, clean all this up. So, you know, looking for price to come in this area, you know, you want to set your stop below this zone. Ideally, this moving average catches up and we can place our stop even a little bit below that, and then target, yeah, like I said, that 618 level, which is right here. We'll just put this zone back in here for now, because, you know, we might as well go big. We might as well target the next level, because we do believe this is bullish. So I think it's going to break this level. So there's no intent. There's no. I don't want to take a trade based on just targeting the level that was right here, because it's just not enough. I mean, we're anticipating it going higher, so we might as well target a little bit higher. We know it's got the volume to do it in the week, so I do think it's very reasonable. Looking at this 4-hour moving average, price did break above it, so ideally it'll stay above it or just retest a little bit in this zone, so that also lines up really well. So yeah, this is what I'd be looking for. So next week, or I guess this week coming up here, what do we have? So Monday, this is Monday, Tuesday potentially. Like, it usually moves 28 cents a day, and it's moved, you know, 41 cents on Friday. So between here and here, that's 20 cents. So yeah, I mean, it could definitely do this one day. So I think Tuesday we might be in on the trade, and then shoot for this, you know, $1.05 all the way up. I think Monday will be a little slow anyway, so it'll just be like a nice little sell-off day back into this area, and then Tuesday hopefully the buyers come in. So then we'd be looking at something like this. So this is literally the entire trade playing out all week. So by Tuesday it's in this zone, then it gets bought up, and we just target this area. And like I said, if it gets weird in this little area, you know, if you get a bearish engulfing candle at this area, then close the trade. But other than that, I would just hold it, and I would cinch the stop up below, just kind of, I'd keep it below this moving average obviously and below this zone, but wherever these wicks come in before it gets bought up, let's say you get a couple candles in here and then you get a nice bullish engulfing candle out of this zone, just keep your stop below all those wicks a little bit, just in case price needs another liquidity grab. And then you're good to go. Ideally get at least 2 to 1, but probably 3. So right now we're looking at like a 3.6 risk to reward, so that's fantastic. And yeah, this is what I would be shooting for. I think this is a very good setup. I think you know, you're with the trend, the daily, the 4-hour, the 1-hour, all the trends are in your favor. You got good price action telling you that you know, we're you know, it's favorable. So you know, even if this is bearish, or sorry, even if this is bearish, potentially, let's say we're completely wrong and price is going to break lower, it's probably coming up to this area anyways. So that's you know, this is a really ideal area to target regardless, right around 414, 415. So that's what I intend to do. So that's Cipher mining. Let me know what you guys think in the comments, and I'll see you in the next one.